Good morning, everyone. I'm Chris Hemsley, the Managing Director at the Payment Systems Regulator, and it is an absolute pleasure to be here to join you today for the largest PAY360 conference to date. So I'm here to talk to you about the future and our work for 2024 and beyond. But first, to quote Einstein, if you want to know the future, look at the past. And there's a very good reason for doing this in the context of payments. Because we want UK payments to continue to innovate and change, to make sure that they can support businesses, people, and the economy. And we will set ourselves up for success if we learn the lessons of the past. So cast your minds back 15 years or so ago. Cash was a very common means of payment for most of us. The only way to make an FPS payment as an individual was via internet banking or perhaps more commonly over the phone. But now, where are we? Well, the speed at which payments have developed to where they are today is unprecedented and perhaps somewhat unpredicted. We continue to see payments evolving and adapting to different needs. So on this comparison, much has been achieved. And when judged internationally, UK payment systems also perform well on a number of criteria. They operate to high levels of security, processing large volumes and values of payments, and they do so quickly and mostly very conveniently. So where do we stand in terms of meeting the challenges of the future? Well, it's instructive to look at recent reports into payments to see where we might need to focus, what we might need to work on. So, for example, consider the following findings. The governance of UK payment schemes restricts their ability to innovate in a number of ways. First, schemes controlled by existing players have little incentive to change their infrastructure purely to benefit customers or new entrants. The quote goes on. Second, mutual governance means that many schemes move at the pace of the slowest member. The need to achieve consensus on all decisions exacerbates the tendency and all too often leads to inertia. End of quote. Now, I should probably clarify. When I said that was a recent report, it's 25 years old. These are the conclusions from the Cruikshank report, a year 2000 review of the banking sector. Now, certainly a lot has changed since then. The PSR was set up, for one thing. Our central account-to-account payment systems moved from being owned by large banks to being owned independently. The interbank systems have also been opened up, with new firms like Wise, Ebury, Monzo, Starling, Clearbank, I could have gone on, among many others that are offering new payment and banking services. But have we completed that journey? Are Cruikshank's concerns no longer relevant? Have we managed to move to a model where we readily support innovation? Are we able to quickly deploy new technology and adapt rules for the benefit of all stakeholders overall, even if it acts against the interests of some participants? In short, no. And we can look at what happened when there were attempts to change the central rules to protect people from authorized push payment fraud. Despite considerable efforts, changes to the rules required unanimous agreement that could not be secured. So instead, the law needed to be changed so that the PSR could act. We also see some of these challenges in the delivery of confirmation of payee. And this was despite widespread support for the change from participants. It needed regulatory action in order to secure that timely change. And today, of course, we are still seeking a way to move open banking forward in payments. So how then should we support innovation and affect change in UK payments? In some ways, how do we realize the futures that we have just been discussing in that previous panel? It is absolutely imperative that our payment systems continue to modernize and change, and that the markets that they support continue to develop, promote competition, and drive innovation. This is important for consumers, businesses, and the whole economy. Payments, after all, sit behind pretty much everything we do. So as a country, are we set up for driving that change into the future? And where might that change come from? So on one hand, you could look to UK consumers. UK consumers who are able to use digital payments benefit from convenience. However, there are no price signals pushing them to change. And yet they ultimately pick up the cost of payments that is faced by merchants and businesses. They do not, of course, see this cost as it is buried in the price of goods and services. As such, while consumers are likely to adopt better functionality whenever it's available, they can't respond to the sorts of price signals that lead to competition in many other markets. On the other hand, the ability of retailers to take payments is, of course, critical. But the reality is that for most that means accepting both Visa and MasterCard as a minimum. We have set out our view that these schemes are must-take for most retailers. This limits merchants' negotiating power. And we see this playing out in pricing. For example, we have set out our analysis of the increase in card scheme fees, and we're investigating these along with a number of other fees. But that points to the fact that there is a need for greater choice. And this is particularly important in the UK, as we differ from many other countries who have their own domestic payment mechanism for retail payments. In short, a third scheme. Now, the other stimulus of change can come from industry participants themselves. And that can happen in two broad ways. First, it can be driven by competition. And this is particularly effective in many payments markets. Look at how new firms have improved the ability for the smallest merchants to take digital payments. This has been transformed to such an extent that micro businesses can readily take payments using just a mobile phone. But does this dynamic work as well for payment systems themselves? With understandable barriers to providing national critical infrastructure and the need to build networks with customers and merchants, this market is one that is characterized by limits to effective competition. Now, the alternative, the model Cruikshank refers somewhat critically to, is to rely solely on collective action by industry participants. Now, the core problem here is that collective interest may not always align with the interests of potential new entrants, with consumers, businesses, and the wider economy and society. And history points to the risk of moving at the pace of the slowest, or the need only to move forward if the future does not threaten anyone's returns. And this is where the payment system operator, the PSO, can bring multiple benefits. They can provide vital coordinating capability, changing rules to reflect risks, and to unlock benefits. It can also unlock investment in new technology. And just look at the role that the PSO plays in driving both Visa and MasterCard's systems forwards. Rules are updated, new technology is deployed, the network does not proceed at the pace of the slowest. The same cannot yet be said about Pay360. Its ability to change its rules in practice is constrained. And this is prompting the PSR to use our powers to require those changes to the rulebook. Now, let's be clear, Pay360 is changing. It's improving its capability, and it is taking forward new initiatives on fraud, broadening its role to more actively manage its rulebook. So here is the first choice going forward. Should we complete this transition and build on that model of an independent PSO for our independent banking systems? We think so. And we set this out in our strategy, the importance of improving the governance of our central account-to-account systems to unlock progress, competition, and innovation, working alongside and indeed supporting competition to drive good outcomes. Reinforcing this PSO role also reflects experience elsewhere. Wherever you look globally, large transformative change in payment systems has a strong central coordinating body somewhere. UPI in India, PIX in Brazil, but also much more closely to home, the upgrading of RTGS by the Bank of England. We need to get the delivery of our payment systems right. These central systems make a vital contribution to competition and innovation across the ecosystem. The openness that is built into our interbank systems is a real strength. It has helped new firms grow. This is an important part of supporting the UK's thriving payments sector. 10% of fintechs globally reside in the UK, outstripping the whole of Europe combined. And the payments subsector currently accounts for the largest share of fintech funding. Payment fintechs are busy developing ideas, competing for customers, and developing innovative new payment services that users value. Markets and competition are powerful forces that we rely on to deliver innovation. But markets are institutions. They depend on agreeing the rules of the game. And effective rules are needed to provide fair competition and to unlock investment and innovation. To agree rules, there needs to be coordination between market participants. And to ensure fair and effective rules, particularly where there are powerful incumbents and where the rules need to take account of future participants, there is an important role for regulatory oversight. Payment markets need regulation to make them work well. So turning to open banking, this is what we are seeking to do in open banking. This is what we're seeking to do in open banking, to help create new payment markets. We've been discussing how best to do this at both the Strategic Working Group and through the more recent VRP Working Group. And that last group concluded that while there was widespread appetite in the ecosystem to expand variable recurring payments, there were a number of important areas where targeted regulatory action might improve the prospects for success. And so we consulted on initial proposals earlier this year. And following that process, we have heard loud and clear feedback from some that they feel that we are proposing to intervene too much, notably on requiring participation and on controlling some prices. So on this, I want to stress three things. First, where there is clear consensus in industry, we have asked industry, led by Pay.UK and OBL, to get on with it. Develop the rules, the functionality that will enable VRP use cases to succeed. And this, of course, includes establishing that core dispute resolution rulebook. Second, we are exploring the need for targeted regulatory intervention to make this work, like mandating the participation of sending firms. And third, we are looking for a way to create a commercially sustainable market for open banking payments, and for this to provide a credible alternative to a wide range of digital payments, including cards. For it to be commercially sustainable, participants need to be able to recover their costs. And where there is competition, make a profit where they are good at what they do. This rewards them for investment and for the innovations that they bring that benefits end users. Now, of course, the costs of providing the central directory and of processing underlying payments still need to be recovered. And we currently think that the best way of doing this is for the PISPs, or the receiving banks, with prices to merchants being set by competition between PISPs and between providers of business banking. That word, competition, again. We also set out proposals to both remove the FPS charge faced by banks processing the payments initiated by others, limiting the costs to these firms. And of course, we set out our view that the fees charged by these firms did not look likely to be subject to effective competitive constraints. Now, views from our consultation on these points varied. And the proposal to initially set these fees, those charged by the ASPSPs, to zero, with the cost of that being offset by removing the FPS charge, has attracted significant concern. Now, I'm not going into the detail or set out what we are going to do yet, but I would like to point to something. I'd like to put our approach in context by looking at a parallel from another sector, telecoms. In telecoms, the proactive and deliberate regulation of key industry prices has helped support competition. Call termination and number portability charges are set by the regulator, and that helps mobile competition work effectively. I wouldn't describe mobile telephony as a price-controlled market. Instead, it is a competitive market unlocked by targeted regulation. And that is essentially my starting point when approaching open banking payments. So in summary, there are many points to consider about how to unlock change and innovation in ways that deliver good outcomes. And we're looking to open banking and scaling up the use of VRPs, and we think that we need to have effective rules in place to do that. Unlocking competition often requires some central coordination, and creating new markets sometimes requires targeted regulation to support rulemaking and also to control pockets of market power. Making these changes is not easy, and it requires creative thinking, innovative solutions, and of course, collaboration. But they also bring long-term benefits for businesses and for consumers. And they can ensure that we definitely consign Don Cruikshank's concerns to the history books. Thank you very much.